Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on? Well, this week we had NVIDIA earnings, right? Kind of a nothing burger. Didn't really move the market one direction or the other. Market just continues to grind higher, higher and higher. They keep pumping liquidity. Liquidity is the name of the game, and they keep pumping it in to the market. Now, they'll tell you they're not doing it, but I know they're doing it. You can look at the HYG, and those just keep going up. When that starts going down, that's the junk bonds. No one's buying the junk bonds. Federal Reserve's buying the junk bonds. No one can convince me they're not. They're pumping liquidity into the marketplace. It has to go somewhere, right? So they're going to push the market higher and higher. Now, will it break eventually? Of course it'll break. Will it break this year? Very possible. Very possible. We still have time left in this year. And when it breaks, it's going to come down hard. Now, look at. Here's what you got. Here's what you got. You got the GDP, right? Running about $30 trillion. And that goes up about 1 to 2% a year, right? 1 to 2% a year. They got to get it going up, right? Otherwise, we're in a recession. They don't want to be in a recession. So what do? How do they do that? What is pumping liquidity into the market? Pumping liquidity is increasing the debt. Now, what's our debt at? Our debt is more than the GDP. Our debt is at 37 trillion, headed to 38 trillion. You can watch the debt clock. Debt clock keeps printing, keeps going higher and higher and higher. The debt is growing at 8 to 12% a year. The GDP growing 1 to 2%. Debt growing 8 to 12%. Now, what does this mean? What does this mean? Well, it means like for every $100 that they print, right? We get $30 increase in the GDP. So we lose 100 to gain 30. I mean, it just doesn't make that much sense to me. But this is what they're going to continue to do. They're going to keep going, keep going, keep going. Now the Fed's coming out, right? Not only are they going to keep the money printer going, but they're also going to cut interest rates. Now everybody thinks when they cut interest rates, the mortgage rates are going to start to come down. I got news for them. When they cut the interest rates, and you watch, what is it, I don't know, September 19th or whenever it is that they cut the rate, right? They're going to cut the rate because, Trump has bullied Jerome into agreeing to cut the interest rates, right? And we'll talk a little bit about why they're going to do that here. But Trump wants those rates down so we can get the stock market higher, so we can get more liquidity. But when they cut those rates, you watch the long end, the 10-year, the 20-year, the 30-year. The short end is what they're cutting, and the long end's going to be going up. Now, that's where your mortgage lives. Your mortgage rate is not going to be coming down. It's actually going to be going higher. Now, I think eventually mortgage rates will get to 10, 12%. I think inflation, easy 10%. Even the way they measure it. They're measuring it right now, telling you it's at 9%. The PPI rose 0.9% month over month, right? And you multiply that out by 12, you're over 9% right now, but they'll tell you that CPI. That CPI, as I like to call it, is below 3%, running about 2.5%, right? But I'm telling you, even the way they measure it, it's going to get above 10%, possibly above 20%. Now, what's this going to do? It's going to cause a lot of problems. And everybody thinks, well, that's going to cause the housing market to go up. No, it's not. Now, here's the cure. Okay, the housing bubble is the biggest in the world, right? I mean, we had the biggest bubble in 2008. And now in 2008, what happened? Prices started to come down. They came down 34% from 2008 to 2012. 34% they came down. And what did the Fed do? They even announced it. They said, hey, we're going to print trillions of dollars to reinflate the housing bubble. And it worked. It was magnificent. We got a bigger housing bubble than we had in 2008. Way bigger. Almost twice as big now, right? Because we printed trillions and trillions and trillions. And we grew the bubble bigger and bigger and bigger. Well, guess what the cure is for the bubble? high prices. High prices cure high prices, right? So we're at these high prices and it killed the demand. There's just no demand for housing up here. Demand for housing 50% off, and I believe we're going to get there, but we're going to have inflation coming back when they cut the rates. Inflation is going to start to soar, but not in the houses. In the houses, you're going to see the mortgage rates start to soar, which high prices but with high mortgage rates is going to bring the housing prices down. Now, look at, we dropped 34% from 2008 to 2012. Now, it takes time to play out. It's not like the stock market, right? Stock market, that could crash. Well, you could wake up tomorrow and we could be down 50% and they'd close the market for the day because it would trigger all the stops, right? So the market would close. But it could happen in one day, open it the next day, and you drop the other 50% and you're down to zero almost, right? So it could happen in just a couple of days. The stock market could crash. Houses aren't like that. People need a place to live. They don't just all dump them on the market. It's a process, right? 2008, 2012, come down 34%. Now in the Great Depression, we only came down 26%. We dropped 34% in the Great Financial Crisis. How come we didn't drop more in the Great Depression? I do believe we're going to hit a Great Depression again, a greater depression than the 1930s. But why didn't the houses really drop back in the 1930s? Well, in the 1930s, they had to put 50% down. 50% down, right? Okay. And how long were their mortgages back then? 5 years. Okay, what do we got now? We got 3% down and 30-year mortgages that they will extend out to 50 years to try to get you into the house. They'll do anything to keep these propped up, right? I mean, that's where the taxes come from. That's where all the property taxes come from, and they need that money. They can't have them drop 50%. They got to pump the trillions of dollars in, and they're going to pump the trillions of dollars in, but it's not going to work. It doesn't work this time. Look, we talked about that already. You print $100, you get a $30 in benefit. You lose $70. Multiply that out by trillions of dollars. You can see we're just pushing on a string right now. So the 2025 is the first year that houses nationwide is going to report a negative number. Now this is going to take 3-4 years to play out. Doesn't crash like the stock market, but we're grinding lower. And it's picking up speed. And where it's really going to pick up speed is when the recession hits. Now, but Mike, we don't have recessions anymore. Everybody knows that. We can just print money and then we'll never have a recession again. And that's what they've been doing, right? We're in a recession right now. I could argue that for the poor and the middle class, they're already in a depression and they're going to be falling into a Great Depression. But they're going to print the money, right? They don't want the recession to happen. They don't want the depression to happen. They want to report that, hey, GDP went up by 1%, but the debt went up by 40%. I mean, we could go from 37 trillion to 74 trillion, and they'll tell you the GDP went up by 1%, so there's no recession. It's the best economy ever. Just ask the Donald, right? But no, it doesn't work that way anymore. We've reached a point. Lower the short end when they drop those interest rates. Long end goes up. Your mortgage goes up. Everything's backwards now, right? Because everything's broken. They've been cranking this money printer for too long. They've been holding rates at zero for too long. Do I think they're going to lower the short end back to zero? I actually think they will eventually. Do I think the long end is going to go above 10? Yes, I do. Above 20? Yes, I do. Maybe as high as 30%. That's known as hyperinflation because that's what's going to happen to our country. Hyperinflation is really the worst thing that can happen to a country. Most governments don't survive it. Now, that might be a good thing. We get rid of our government and install a new one, right? When we hyperinflate, people are going to go hungry. Poor people are not going to be able to afford to eat. It's going to be very sad. It's going to be a greater depression than the Great Depression. But right now, we got the housing problem. It's coming down. And that's 30% of the GDP right there is housing, right? So as that's dropping, the GDP is tough to keep up, right? They got to print more. So maybe soon we print $100 and we we only get $10 in benefit. Maybe we print $100 and we only get $1 in benefit. I mean, how many trillions of dollars are they going to have to print to prop all of this up? Now, it's really interesting to me. You see, we could solve the whole real estate thing in a heartbeat, right? I mean, the government has pumped up this market artificial, right? I mean, they've held the rates at 0% for 16 years, gave out all those low mortgages, and then they bought $3 trillion worth of these mortgages, right? Because no one else wants these mortgages. You know, they were at 3% and now they're up at 6.5%. You see, the government's already lost 50% of the $3 trillion they invested. They've already lost $1.5 trillion on their investment. So they're going to have to buy more mortgages, right? They're going to have to do it to keep the rates lower. You see, if the government gets out of the business of real estate, sells all of their mortgages, quit subsidizing all this stuff, you will see the house prices come down naturally. But the government's never going to get out of the business. Matter of fact, there's a rumor the Fed's going to start buying houses. Okay, that's a possibility, right? So the government wants to be really hands-on in this business. Well, let's do it this way then. Let's solve the real estate problem using the governments. You know, tariffs are a big thing for the Donald. Let's put a 50% tariff on any foreigner that wants to come to the United States and buy a house. $1 million house, 50% tariff, they got to pay $500,000. And that could go to pay down the debt, right? So they buy it for $1.5 million. Now, granted, it's going to push houses up, but I think that's going to deter the foreigners, and the foreigners won't come and buy the houses if they have to pay a 50% tariff. That's just my take. Let's put a 25% tariff on corporations. Let's get them out of the market. You get the corporations out of the market, you get the foreigners out of the market, all of a sudden you get the prices coming down to where regular citizens can afford to buy them, where they can afford to live, where they can afford to raise a family. You got to solve the problem. All right, let's use the government to solve the problem. Let's put the tariffs on the foreigners. Let's put the tariffs on the corporations. That will keep them out of the market and the prices will start to come down. Okay, now in my area, this is fascinating. This is just something a little off the side. But anyways, we get a lot of foreigners coming, most of them coming over from China, right? They come over and they bring a lot of money with them. Why? Because they get it out of their country. Now, they want to get it out of their country and they want to put it somewhere safe. All right, so they come here and they buy up $1 million properties. I sold one once. $5 million, right? Anyways, they came over with $5 million cash and they bought this house. You know, that was like 4 years ago. They haven't moved in yet. House has been sitting vacant. You see, it's called land banking, right? They buy the house and they leave it sit vacant. That's how they get their money out of their country, get it somewhere safe. And as the houses go up, right? Because our government protects the housing market. They protect it by buying the mortgages. They'll do anything to keep it up, right? That's what our government does. So anyways, you get these people coming over and they're land banking these houses. I mean, it's kind of funny, right? You buy a house, you just don't move into it. $5 million house is sitting vacant all over the place. You go to the rich areas around here where I live, and there's a lot of vacant homes. There's about over 10, 20% of them are vacant. That's 1 out of every 10 houses sitting empty. Why? Because it's a foreigner brought over the money and they're just land banking it. That's where the real wealthy people play. They play up at a different level than you and me. They got an extra $5 million to pump into a house and let it sit there. Yeah, they pay the property taxes, but that's nothing to them. That's a cost of doing business. They got the money out of their country and got it somewhere safe. And that's what they wanted to do. But the housing market is shifting now, right? It's starting to shift. Now, these things are, you're noticing Airbnb people dumping their houses, right? I mean, you got a lot of the boomers, right? They're retiring. They're getting on the old folks' homes. They're dumping their house onto the market. It's happening right now. See, I'm at the lower end of the boomers, right? The higher end of the boomers, they're in their 80s already. So they're, polite term, right? They're aging out, meaning they're kicking the bucket. Time to go. It's time to move on. Those houses go onto the market immediately. I get a lot of sales like that. I got one coming up now. Anyways, parents died. The kids are selling the house. See, they can't afford to keep the house because it's $3 million house. So I'll dump that one onto the marketplace. When the people die, they age out and the house gets dumped on the marketplace. But the baby boomers are starting to age out. They're starting to age out and dump the houses. The Inventory's increasing 30% year over year, right? I mean, it keeps going up, going up. Prices aren't free falling yet. You wait till the recession. Right now, it's a slow grind down. When the recession hits, that slow grind's going to look like a hockey stick, and that's where we're really going to start to drop. If you like this stuff, give me the thumbs up, punch the subscribe button. Get out there, everybody, and have a great day. Bye-bye now.